And joining us now as we take a look at the market trade action that we saw on Monday. The soy complex was the star of the show with mixed activity across quarter wheat and livestock trade. Cattle had a good day as well. Here to join us and talk to us about it, John Heinberg, Total Farm Marketing, is with us. John, good to have you on the show, sir. And again, fairly mixed day with some bright spots, including that soy complex on Monday.
Yeah, very much so. That soy complex coming off the week, basically shooting out of the gate here last night and being led by that soybean meal market. New contract highs in that front end of that market. Again, that's probably tied to the Argentina situation. Maybe not so much the forecast, but just the battle for beans going on right now, even though, because of the way things are working down there. You got Brazilian harvest running a little behind schedule. Saw numbers from 4 to 6% complete. Typically, they're 10, 11, 12% in this window. But that's making things tighter to the ports. You got the crushers looking for beans. That's raising some premiums. I heard today or saw today through one analyst's comments that the backup now is 22 days of wait time to get beans out of Brazil. And that's shuffling some business back our way, or at least the market's anticipating that. We've seen these sales pick up here in January in a window where we're typically seeing things start to fade. So a good strong day in those bean meal markets, good strong day in oil came through and helped out that bean market. Now we'll see where we can go. Key resistance over top here. If we can get through that, that opens the door. If we don't, and say we fail to put in a higher high, that could be a bit of a toppy signal. So the next couple of days could be kind of key here and what these beans might put forward.
Well, and to your point, South American weather, I know that looking at that new 2 week model run, more dryness, more heat coming in. And plus, two, it doesn't feel like it's quite a story yet, but the delay with the Brazilian harvest of soybeans kind of keeping our soybean export window open here in the US. But if that, delay in Brazil continues, John, say another 2 weeks, what's that going to do to our market here? I think that is going to be it could be maybe even a powder keg to our market potentially, depending on what happens if we have any more delays in Brazil.
Very possibly. Again, we're still sitting on an extremely tight supply picture. And obviously, the USDA made a negative adjustment on demand on the last report with the intentions that, maybe they see the exports slow down here, but they haven't. So, do we get those bushels back is the question I'm thinking in my mind and bring that carryout back down again. We're at 200 million bushels. There's not a lot of wiggle room there. So, the market's trying to get some rationing done in that regard. Plus, again, here in the United States, crush margins are still very, very strong. There's still demand with this new crush industry that continues to grow and is talked about heavily. And that's just going to keep some support in this cash market. And that can do the heavy lifting in the soybean market overall. So the next few weeks will be very interesting to see if we get those South American supplies moving the way they want them to. Then maybe some of these late sales turn into cancellations, or they'll reset the origin point from Brazil from the United States. So we'll have to watch those things going forward. But at least right now, the market's got some optimism that tight bean supply is going to carry at least until into the summer months.
In this corn market, John, corn lost the overnight momentum and then just chopped right around unchanged. It feels like in the March contract, especially this overhead resistance around 690, going to be a tough spot for us to maybe break through here unless we have a story to help us get through it. That just feels like the very top end of resistance here and really just something to keep an eye on, I think, at least this week, John.
I would agree. Again, we need some demand news. We got export inspections today. They weren't the best compared to last week. Again, we need to see these bushels that we did even get sold move, and we haven't saw that. Some of it might be the fact that we still got good, strong bean numbers, and that took away some port space from the corn going out at this time frame. But, again, we need some news. We're kind of in a market right now. It's like, well, we can't rally it too much because that'll kill the demand, and we can't go too much lower. The cash market kicks back in. Henceforth, we go nowhere. And it kind of feels that way right now. Basically draw a line right through at 675 on March. We've been both sides of that for quite a while here. Same thing in the May contract. The only thing I'm kind of watching today that was a little concerning was some of the negative action in the spreads. March lost to May, lost to December today. July contract lost to December. Maybe we're getting to that point. We're getting a little more comfortable up front. And we're going to start taking some of that, put some carry back into the market here a little bit. So we'll have to watch that, because if the spreads start turning a little bit more bearish, that could just keep some pressure on the front end of the corn market.
How about in wheat? I know the sub-zero temperatures getting down to parts of Kansas, the ice throughout Texas, Oklahoma, and up through Arkansas. I know that's having some concern in this wheat market. We still, though, we came off the overnight highs, only rallied a little bit. There was some weakness in spring wheat as well on Monday. So, what's your assessment of this corn market here as we, or excuse me, of this wheat market as we start off the week?
Again, same thing like corn. We need to see some demand move in. Now, the funds are sitting on one of their largest long positions since basically May of 2019, I believe it was. So do they start covering here? I think they covered a little bit the second half of last week. Did fail at a pretty key point of resistance today, 50-day moving average over top that March and that May contract. And then we kind of finished middle of the range on the day, but higher. So we'll have to see how that plays out. If we can find a way to get up through that area, then we can see some more short covering, see some money move back into that wheat market. That doesn't put us out of the question that maybe Chicago March contract gets back up into the 8 handle. That's where trend line is, kind of working through the lows and the highs going back into July and August. That may be just more of a money play than anything in this window. So we'll have to kind of watch that. It'd be nice to just see some good demand news. We talked about the weather forecast, and that kind of brought that premium in last week. Today just kind of felt like a wait and see day, and we'll see how things shake out as the week goes on.
Well, and I know too, throughout these entire grain markets, we're going to be watching Wall Street this week and watching the Federal Reserve. Their meeting this week. What do they do with interest rates? I know the dollar back higher last I looked, back above 102. Your thoughts? How much, if we see a 0.25% rate hike or whatever the case may be, how much of that's going to spill over into our grain trade? Do you think here this week, John?
The US dollar index has been progressively working lower, kind of finding a bottoming point here. So we'll have to watch what the Fed decision is this week. There's just a lot of mixed signals right now regarding the market. Do they slow it down? Do they keep the foot on the gas? Some people are thinking for a Fed pivot. Right now the stock market's kind of priced in some fluffiness, fluff here a little bit. So I'm a little concerned about that equity market, that it's got some potential to make a pretty good break lower again. Especially if they don't get what they want to hear. Okay, I think again the market's covered the quarter point. It's going to be what the rhetoric is, what comes out of the question and answer session or the Fed statement. That's going to be what's really going to move the markets here. Again, I'm still cautious, but today looked like a good day for the commodity space. We saw money flowing in for the most part in the ag commodities. So again, it might be just one of those things that maybe they look a little undervalued and the money wanted to step in the day, whether it was in the grains or in the livestock sector.
I think another thing to keep in mind as well, Tuesday, end of the month of January. So how much will the end of the month play into markets and maybe give us some of that money flow in or out that we typically see when we wrap up a month, John?
That's always a part of it at this time window. Typically, we see worse movements at the quarter point, March and June, and then September. But again, that's just kind of. But again, it's still one of those things. They want to square up the balance sheets a little bit. Maybe they redistribute some funds to balance out their portfolios. Those always seem to come into play here, especially when we get to that end of month window. And I'm not sure how much of a factor is this month, but it's been a fairly decent month on the grain side, and that might give us some weakness, maybe even tomorrow.
John Heinberg with Total Farm Marketing is our guest analyst here today. John, let's move over to the livestock trade here a little bit. Cattle, a really strong day on Monday. I know a cattle inventory report out Tuesday. I think that's what a lot of traders are keeping their eyes on. There's talk that this beef cow herd could be record small potentially if the numbers come to fruition. So, what are your thoughts with the momentum we saw in cattle on Monday? Was that maybe baking in ahead of the report, possibly some of those numbers? What do you think?
I think that was a very big part of this today was the fact that the cattle markets are looking at those numbers tomorrow. And you talked about beef cow inventory, and that's going to be something we're going to all be watching very, very closely. The expectations are down 4.2% from last year, and that'll put us our lowest beef cow herd since 2014. Pretty much matching that area within a percentage point of that. But that puts us down almost 9% basically in the last handful of years since we peaked this out in 2019. So there's a lot of cows moving to the sidelines here. That's going to reflect a calf crop that's also going to be down at those 2014 levels, if not lower. that's just going to keep that pressure in the market to the upside, in the longer term. And you're seeing the value out there, $200 plus feeders for the fall. April cattle today for 2024 across the 170 barrier. So for a cattle producer, we're pumping some money into this market with an anticipation of tight supplies, targeting some of those all-time highs on some of these contracts. So definitely something to start thinking about if you're going to have cattle in those windows, to make sure you've got some defense underneath you. But again, I think we're going to get some confirmation tomorrow. I think the market's anticipating that. And that's why we saw the strong money flow today, as some of the shorts were moving to the sidelines, breaking April cattle out to new contract high today.
Now I wonder too, with this cattle trade, if those numbers come in even more bullish than we expect, which obviously I feel like the potential's out there, just given the talk around feedlot country. How much higher could that be the move? Could that be the number that finally gives us this big bullish move in cattle? I wonder if producers should maybe be prepared for that, maybe be on the defensive if we get a bearish number. What's your thoughts heading into a big report like we will see on Tuesday?
Again, typically cattle on feed's pretty well anticipated in terms of what we're going to get. So, but again, great value out there. I know I had that conversation with producers today. Get the safety valve put bought. Protect the level that's in front of you. It doesn't cost much to put a 160 put underneath the April contract right now. If you want the cattle to be long, there's your long side. But at least if we get a haywire number or something goes off the rails between now and April, you got something in there. Again, we're very, very elevated in terms of historical price values. The money's moved into the cattle market fairly strongly. Not sure how much more they want to push this thing higher in this window, so we'll have to see. But again, we're getting back up to those historical highs, and that's definitely a spot you want to make sure you got something underneath here just to keep that price flexibility in front of you to the upside.
John, over in the hog market was a little bit all over the place, settling up rather firm on the day Monday. That front month February, staying pretty close in line with the cash index, but this hog market's just been so volatile. Uh, I struggle some days to come up with something to talk about with this hog market, with just how crazy it has been the last couple of weeks, John.
Yeah, new break to lows on that Feb contract. Again, just lacking the strength of the cash market. You still got a $3 premium of the futures over the index, and even greater than that according to the direct cash trade. So we still need that cash market to stabilize. But April at least feels like it's put a bit of a bottom in with that big reversal on Thursday. Got solid follow through. Tried to blow it through the bottom side a little bit this morning and saw the buyers step right back in again and lift it back above, holding that 86 handle. Now, I don't think we got a ton of room here in the short term unless we see some of the fundamentals change, but it kind of feels like this market at least maybe wants to get sideways here with the potential to go a little higher, especially if those hog numbers stay tight. That's something we still got to keep an eye on going forward. Right now, we're hearing the chatter, and it's one thing the beef guys need to be aware of too, is beef prices got expensive. Now, are we going to start seeing the consumers shift to pork, shift to poultry a little bit more, taking away some of that beef demand, increasing that pork demand, which at these price levels, looks pretty friendly in that regard, that there's some good value there.
I couldn't agree more. I think that's the big thing we're going to have to watch here this next week, or well, not this next week, this next couple of months, is retail demand, retail values. And I think about it too, John. I go to the grocery store. Yeah, I mean, I want a steak, and I think people who are going to eat steak are going to eat steak. But I'm also thinking, well, maybe I'll get some pork chops instead of, a big bundle of steaks, just because, hey, I'm saving a few dollars here, or quite a few dollars in some cases. I think that's a very important component here to this protein sector as a whole, John.
I would agree. And right now we are watching beef retail values come down. That's some of the reason we've seen the cash market flatten out here a little bit. Again, so a big move here going into that report would make me want to be a little defensive, especially we don't see those other factors come along, that the money's buying into the report before the numbers come out, which could be setting this market up for susceptible topping action here in this window, which we kind of put a typical January type high in, calm down again until we see the spring and the grilling demand kick in. So again, getting back to that other point about taking care of value here, I think that's a great idea to look at some of those early front end put protection in here underneath that cattle market, because again, retail values coming down, cash market quiet last week, trading slightly lower. Maybe the shift now, seeing some more movement into the pork side because those values are cheap. Just kind of maybe makes the cattle market look a little shaky here. Not that I think we're going to wash out, but maybe we flatten out a little bit.
John, before we let you go, any thoughts on the dairy market here as we take a look at Monday's action?
Again, the milk market just looks scary. Big drop in block cheese. We got a high amount of barrel supplies out there, and we got a big spread starting to build, almost 30 cents between the two again. So that gets a little nerve wracking to the milk market. Which way does it go? Does cheese prices come down from the blocks to meat barrels or barrels to meat blocks? Again, the barrel inventory is fairly heavy now. This is a window we should see some decent cheese demand as we're getting into Super Bowl and pizza season and things of that nature here. But again, the milk market for a few weeks now looks like it's been on a slippery slope. And again, breaking to new lows today on that February contract just makes me, feel like we got some more room for this thing to go here if we can't find some footing.
John, if producers want to reach out to you and the folks there at Total Farm Marketing, get some market advice, what's the best way to reach you?
Sure love chatting with them anytime. Give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. Again, don't forget about our website, totalfarmmarketing.com. A lot of great information for producers out there. Take advantage of it. Love to have the conversation. Feel free to pick up the phone and give me a call.
Again, totalfarmmarketing.com. With that, John Heinberg, appreciate the time. Thanks for joining us, sir. Have a great week. We'll talk to you next week.
Sounds good. Have a great week.
That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.